Hello, students, and welcome back to another episode of our lecture series under our subject, Capital Market. So for this video, pag-usapan naman natin kung ano yung fixed income securities market, or sa ibang term, we call that the bond market. So previously, we've talked about the highlights of the equity securities market. So this time, ang bida naman ay ang bond market. All right, so let's proceed to our presentation outline so you know what to expect for the entire duration of the video. So there are four key point of our discussion. The first is we're going to define, and we're going to look at the characteristics of bonds, followed by the types of bonds traded in the bond market. And then the third one is, I think this is going to be the highlight of our video for today, simply because if you're really planning to start investing in the near future, you have to be well aware of course, when we say investments, there are a lot of benefits, but what about the risks associated with investment? So before you really decide if it's for you, I guess you have to know the information regarding the risks that are attached to the concept of investments. And then the third one is I am going to show you, okay, the trade-off between investing in bonds and other alternatives of investments. Okay, so I think before I proceed with the definition, I want to show to you guys the overview of the bond market in the Philippines. Okay, so in the Philippines, well, as compared to other countries, syempre hindi pa naman ganun ka-complex ang ating bond market. We only have a few types of bonds that are being traded here in the country. But just for the context, well, as of 2020, according to the Asian Development Bank, our country recorded at least 8.13 trillion or $168 billion in terms of the overall valuation of our bond market. Well, surprisingly, I'm sure you will be surprised seeing this figure on your screen right now. It shows that 79% of our total bond issuance comes from the government, and only 21% were issued by private firms or corporate firms. So what does that mean? Ano? Well, ang gobyerno kasi natin, we have many sources of funding. So we actually have international debts, and one way of raising money by our government is through issuance of government bonds. So these are also called as local debts. All right, so local na utang, because we know when we say bond market, it's a market for debt or utang. It's also called as a debt security, right? And so when we say utang ng gobyerno, we're not just talking of international debt, but we are also looking into local debts. So napakalaki, that's almost 80% of the total bond market. Now, for the corporate bonds, it says here, according to the report, that the banking sector holds the largest issuer of corporate bonds. So when we say banks, akala mo, dun ka nangungutang, no? But yeah, hindi lang bangko ang nangungutang, but even banks themselves, actually, they have their own kind of debt. Yes, may utang din po ang mga bangko. And that's through the form of issuing bonds. Okay? So, nakakapangutang din ng mga bangko through the form of bonds. And then, it's followed by the property and utility sector. Okay? The reason kung bakit, again, the capital market is so essential is because firms or the government cannot outsource financing just by relying 100% on banks. Okay? So, because of the capital market, they are able to raise capital in a long term with a bigger amount. So, hindi yun kayang gawin ng money market. The only capable market that can do that is the capital market. That's why it's so essential that the capital market exists, because if not, our economy would be very illiquid. Ibig sabihin, magkukulang tayo ng funding, ng financing from local and international debt without the capital market. That's why the capital market is not just important for our firms to continue its operation, but also the government to have sustainable operations in the next coming years to come. Ano? So that's good to know na 80% pala ng ating bonds ay issued ng ating gobyerno. Now for this next presentation, I just want you to see. This is in a global perspective, global fixed income and equity issuance. So this is according to the SIFMA Capital Markets Fact Book, issued or published in 2020. So ang gusto ko lang ipakita sa inyo dito is this one. As you can see, the legend here is that the green color signifies equity issuance, and the fixed income signifies the turquoise color signifies fixed income issuance. So as you can see, napakaliit lang na portion ang actually sa equity. And majority of these issuance are actually fixed income. So which means, in a global scale, hindi lamang, in a global scale, we can see that we can see that the fixed income market or the bond market is more highly utilized. So let me just rephrase that. Mas highly utilized ang bond securities or fixed income securities as compared to equity securities. Why? Because mamaya as we define the nature of bonds and its characteristics, you will realize bakit ang laki pala. Or kumbaga ang liit lang na portion ng equity, but we keep on highlighting stocks, di ba? Parang when you say capital market, mas famous talaga ang stocks. But no, in terms of utilization, mas ginagamit talaga ang bonds. Number one, because it's a safer investment, and it has a predetermined maturity. Unlike sa stocks kasi, it can be lifetime, but with bonds, there is a fixed maturity. See, it's wala man sa 20%. This is actually like 5% of the entire global fixed income and equity issuance. Napakalaki ng kino-cover ng bond market. And then the next figure I want to show to you guys is this one is a global bond market in terms of total outstanding bond issuance. Ibig sabihin, they're still, kumbaga, hindi pa nagmamature, kaya outstanding. These are still, hindi pa po fully matured na mga na-issue na bonds. So, as you can see, the color orange of the pie signifies corporate issued bonds, while the blue is a government-issued bonds. So, ganun din, in a global perspective, majority pa rin talaga ng ating bond market composition comes from the government, and then only 32% comes from the private sector. Okay, so hindi nagkakalayo dun sa figure ng Pilipinas, talagang majority pa rin ay gobyerno ang nag-issue. The next one is, I want to show you guys the composition of the global corporate bond market. So this time, mas focus sa private firms. Kung titingnan nyo dito sa ating legend, the blue color signify the financial sector. Okay, so in the case of US, napakalaki ng composition din ng kanilang financial sector. Ibig sabihin, same lang po sa Pilipinas, malaking portion ng kanilang bond market represents issuance coming from the financial sector, followed by the industrial sector, and then followed by the consumer discretionary sector or the consumer industry or sector. And then we have the utilities. Although dito sa Pilipinas, we have three major issuers of corporate bonds. Number one is the financial, followed by the property sector, and then the utility sector. So, ito naman, worldwide perspective. Ano? So, financial, industrial, consumer, utilities, energy, communications, materials, healthcare, consumer staples, technology, and others. So, I just wanted to show this slides to you guys just so you know kung paano yung lagay ng bond market in a global perspective before we proceed to the definition of bonds. All right, now let's move to our discussion proper. Now let's define and see the characteristics of bonds. Okay, before that, let me just make it clear to you guys that there are a lot of similar terminologies that is being used when we are mentioning a bond. So it's either it's a fixed income security, it's a debt security, it's an IOU, or simply you call it a bond. Okay? So whenever you hear these terms, they all mean the same. So wag kayong malilito if you feel like, ang daming pangalan, no? Pero madaming pangalan, but they are just pertaining to a single security which we call a bond or a fixed income security. Okay? So, ang tanong dito, dahil sinasabi mong isa siyang utang, ito palagi kong tinatanong sa mga students ko na nalilito pa sa bond investment, ano? How does a bond really work? No? So, if it's a form of utang, pag ba ikaw yung bumili ng bond, ikaw ba yung umutang o ikaw yung nagpapautang? Yeah, let that question sink in, no? Habang ini-imagine nyo, no? Bond is a debt security. It's a form of a debt pero investment. So how does that work? Okay? Ikaw ba yung umutang o ikaw yung nagpapautang? Okay, from now on, whenever you hear the word bond, always remember, you are the one extending debt. Ibig sabihin, ikaw yung nagpapautang. So, kung sino man yung nag-i-issue ng bond, sila yung nangungutang. At kung sino man ang bibili ng bond investment, siya ang nagpapautang. So, sabi niya, whereas the investor acts as the lender or creditor, and the issuer, whether it's a corporation or a government, that is considered the borrower. Okay? So, dalawa lang po yan. Ikaw yung umutang at ikaw yung nagpapautang. Kung ikaw yung bumili, ikaw yung nagpapautang. If ikaw yung nag-issue, ikaw ang nangungutang. So, that's the basic mechanism of a bond. Now, the next one is the issuer. So, the issuer is yung nangungutang. Okay? So, the issuer promises to make regular interest payments. So, tulad ng isang usual na nangungutang, I am promising you that every year or semi-annually, no, twice in a year, magbibigay ako sa'yo ng interest payment. So, kung ikaw si investor, ikaw yung nagpautang, you will be receiving interest income out of the debt that you extended to the issuer. Okay? So, dun sa utang na yon, meron tayong tinatawag na coupon rate. So, nakasulat dun sa certificate of bond investment mo na ito yung rate ng utang, we call that the coupon rate, on the amount, or we call that the principal amount or the face amount of the bond. So, it's either the principal amount or the face amount. They mean the same. Okay? Until a specified date, or we also called as the maturity date. So, hindi pwedeng maging ganap ang isang bond investment kung wala po itong nasabi na ito. Okay? So, these are all components of a bond. Pag wala yung isa dyan, hindi na siya valid. So, kung wala siyang coupon rate, enk. Kung walang face amount, enk. Kung walang maturity date, enk. So, hindi na siya bond. So, all of these elements should be present once you would decide to invest in bonds. Okay? So, finally, at the maturity period, the issuer is required to repay. Okay, when we say issuer, siya yung nangutang. Okay? So, ibig sabihin, if it's a 5-year bond, the issuer will repay the face amount. And when we say the face amount, it's the entire amount. So, if the issuer issued 500,000 worth of bond to an individual investor, so kailangan niyang bayaran yung buong 500,000 at the end of the maturity period back to the investor. So malinaw. From that being said, you know that when you invest in bonds, you are very much certain of the amount that you are willing to shell off. You are very much aware of the rate, the coupon rate, the interest rate that will be paid to you as a return to that, or as a leverage to that risk on entrusting your money to an entity. You know kung kailan ibabalik yung pera mo. And so with that, this makes bond investment very appealing in a sense that it's a very safe form of investment. Because you're receiving a passive type of income through interest payments. Okay, so it's very much safe because of what we call the predictability. So when an investment is very much predictable, you know it's a safe investment. Okay? Kaya siya tinawag na fixed income securities because there is a fixed amount of payment, regular fixed amount of payment, and you know when the entire investment will be paid back to you. Okay? So I hope by this time you already understand how a bond investment works. It is very certain, it's very safe, and at the same time, it's a good choice for a passive income. Now, here's an example. Okay, so let's just say you bought a $1,000 face value. So the principal amount is 1,000. But when you say kasi bond investment, you always say face value. So the principal amount is $1,000 with a 6% coupon rate. So you know that there is a face value, there is a coupon rate, and the issuer will pay its bondholders $30 every 6 months, or dahil 6 months yon semi-annually, $60 per year until the bond's maturity date. So wala siyang maturity date dito, but let's just say it's a 3-year or a 5-year bond, ano? Pero may nakasulat naman until the bond's maturity. So when the bond matures, the investor is repaid the full 1,000 face value. So paano nakuha yung $30? That's 1,000 multiplied by 6%. So you got, semi-annual pala siya, no? So 1,000 multiplied by 6%, that's going to be $60 per year. Okay? So ganun lang po siya kadali. Anyway, we will be talking more of that when we reach yung bond valuation topic natin, ano? But this is just a fundamental discussion when it comes to fixed income securities market. Now, here are the basic differences of a bond and a stock investment. So, a bond investment is a debt investment while a stock investment is a equity investment. So, ang debt, it's purely utang, but when you say equity, there is a purpose of control and ownership. So, kapag bondholder ka, wala kang karapatan, wala kang voting rights sa kumpanya. You are only extending debt. You are only considered as a creditor. Okay? Bonds are issued both by governments and companies, while stocks are issued mostly by companies. So in bonds, you earn interest, no, interest income, while in stocks, you earn dividends. And bonds and stocks both experience capital gains and capital loss because there are certain types of bonds that you could actually trade in the market. But there are bonds na purely it's bought for hanggang sa mag-mature. But for some bonds, merong tinatawag na secondary market, ibig sabihin, you can trade bonds from one trader to another. Okay? So parang same concept ng sa stocks. And then coupon rates are most often fixed. Okay? But for stocks, walang fix, walang rate ang stocks, You could either lose 20% or you could actually gain 200% in a year. Maximum 'yon. Depende pa kung normal yung ating tinatawag na economic performance. During the pandemic, those are abnormal times. Kaya yung loss and gains are also abnormal. But certainly, coupon rates are often fixed. So the rate of interest stays constant throughout the life of the bond. Although some are variable or floating. Ito yung sinasabi ko. Hindi pala. Sorry, pag-uusapan natin tong floating tsaka variable interest rates later, But some pays no interest until maturity. Ito, pag-uusapan din natin to mamaya as we reach yung types of bonds, okay? But definitely, coupon rates are mostly fixed, although some are variable or floating, but some are, they pay interest and they pay no interest until the maturity. Ibig sabihin, lump sum, babayaran ng minsanan. And then, bonds are usually traded over the counter. Okay, ibig sabihin, you don't have to purchase that in a stock exchange. You only have to purchase that through straightforward to a broker, from an underwriter. So no need to trade in the stock exchange. So we call that the over-the-counter market, yung hindi na dumadaan sa exchanges. So ano na siya, kumbaga parang from one agent or one broker to the investor, right? And ito yung pinaka-importante na kailangan alam ninyo, no? So if a corporation goes bankrupt, bondholders have a higher claim on assets than stockholders because the moment mag-close, this actually makes bonds a safer alternative simply because if the corporations go bankrupt, in terms of hierarchy, pinakaunang pinaprioritize ang mga creditors, outside creditors, and then the bondholders, and then finally the stockholders. Mas mataas ang priority in terms of liquidation or bankruptcy. So, alam mo na, kahit mag-close yung corporation dahil hindi nga certain, you can never tell hanggang kailan ba nandiyan ng isang corporation. But you don't have to worry because in terms of liquidation, like I said, they will be one of the first priorities to be repaid. Okay? So here are the basic components of a bond that you should understand by now based on the definition that I gave a while ago. So a bond has an issuer. It has a principal amount or face value, also called as face value. It has a coupon rate. Okay? So, usually paid yearly. Regular po yan. Yearly po yan, ha? And of course, the date of maturity. Like I said, kapag ka nagkulang sa isa, yung component, hindi na siya classified as a bond. So, kailangan check lahat yung mga yan for it to be considered as, in its truest sense of, kumbaga yung essence niya as a bond investment, andon. Alright, for the next coming slides, we are going to talk about the variables that affect the value of a bond. Okay, remember, value is very much different from the word price. because price is just a numerical presentation, but value is so much more than that. Okay, so value, it means its potential for growth. Okay, kasi the reason kung bakit ka nag-i-invest is because you know that there is growth. Kasi meron tayong financial management principle na sinasabi na the dollar that you invest today is no longer the same dollar that you will be getting tomorrow. And that's because of value. Okay, the value that you get out of investing. And so when we say value, it's the potential for growth. It's the potential for gain. Okay, so we have 1, 2, 3, 4, 5, 6, 7. We have 7 variables that affect the value of a bond. So first, let's talk about maturity. Okay. Now, what about maturity? Ano ba yung maturity? So maturity simply means the length of time. So the longer the duration of a bond, okay, the higher its coupon rate would be, because a longer duration would mean more risk for the investment, specifically if it's a bond investment. So if you want a larger value for a bond investment, you go for a long term. It's a longer term bond investment. So if it's a shorter term, alam mo na, its value would be, kumbaga, you will be receiving a smaller amount of incentive because of the maturity period. Okay? Again, maturity means the length of time. The longer the time duration of the bond investment is, the higher the rate or the higher the return would be. Now, how about redemption feature? So, redemption feature simply means it comes from the root word redeem. Ibig sabihin, kukunin mo na ulit. Okay. So, ang bonds, pwede siyang i-call. We call that, there is a call feature. Pwede siyang tawagin. Ibig sabihin, if the bond has a maturity period of 5 years, the company has a power to call the bond in less than 5 years. Ibig sabihin, on the 3rd year, kapag bumaba yung interest rates, pwedeng i-call ulit ng company yung bond investment mo at babayaran niya na ng buo yung utang mo na, like for example, 500,000, bumaba yung interest rate. Sasabihin niya, sige, babayaran ko na ng buo yung ininvest mo sa akin so that I can sell it at a higher interest rate. So parang ganun siya. We call that the call and the put option. So I just want you to be familiarized with the terms. I know it's a very technical term, but I just want you to be familiar with it. So ito, ginagamit pa ng mga bond traders, yung call tsaka put option. But anyway, this is a special provision for the issuers. So yung mga investors o yung mga nagpautang, wala silang karapatang tumanggi, because this is really a significant authority, but it's a provision. Ibig sabihin, meron kang privilege to do it, to call the bond even before it matures. Okay? So, hindi lahat ng bonds merong call and put options. Let me make that clear. There are certain bonds that really have straightforward mechanism. Ibig sabihin, wala silang ganitong provision, call and put options. And so, kapag merong call and put options ang bonds, mas mataas yung rate of return, because this is to compensate for the risk that the bonds might be called early. Okay? So, if you are looking for a more appealing return, syempre, kung gusto mo ng mas mataas na return, dun ka sa medyo mas mataas ang risk. Diba? Merong safe na bonds, meron din namang medium risk na bonds, at meron din namang high risk na bonds. Mamaya pag-uusapan natin yan as we go on with the discussion. Ano? But anyway, so call and put options are provisions or privilege that allow or require the issuer to repay the investor's principal at a specified date before the maturity period. So alam niyo naman, since very capitalistic talaga yung ating topic, it's really the wealthy people that have control when it comes to the capital market. When the circumstances are good for them, 'di ba? Meron silang they have an extra perks. Meron silang extra perks na kung saan they can maximize the opportunity around them to make more money. And thus, we have call and put option. Pwede nilang i-call yung bond investment mo kahit hindi pa nag-mature. Alright? It's for their own benefit. But, of course, syempre, mas mataas yung rate. Let's say, for example, in the first 2 years, you've received, instead of just a 4% coupon rate, you would be compensated with 7%. So, ikaw ba naman, ayaw ka ba dun sa 7% instead of the 4%? Syempre, doon ka na sa 7%. But, the risk there is, pwede siyang i-call earlier than stated in the maturity period. While a put option naman is the option of requiring the issuer to repurchase. Okay? When you say repurchase, magkaiba po yun dun sa repay. Kasi dito, you're just going to pay the principal or the face value. While here, you are really going to repurchase the bond the time it was purchased at a specified time prior to maturity. So, kanina, you're just paying for the principal amount, but this time, the firm is really going to repurchase the bonds as if it was purchased when you first purchased the bond. Okay? So, call option, you're going to repay the face value. Put option, you're going to repurchase the bond as if it was the first time it was purchased. Okay? So, yun lang ang ibig sabihin ng redemption features. Again, the value of a bond increases when the redemption features has a call or put options. Or sorry, the value of a bond increases when there is a call and put options attached to the bond investment. Okay? Next, how about the credit quality? All right. I think when we say credit quality kasi, no, these are actually credit ratings. And here on the first column, these are different credit rating agencies, most especially in the US, kasi sila talaga yung very active na nag-i-invest yung kanilang mga private firms. So they are hiring these credit agencies to accredit their different investments so that investors are actually knowledgeable on how good or bad the investment is in terms of the ability of the firm to repay its debt. Okay? So, ulitin natin. The reason kung bakit nagkakaroon ng credit rating agencies is because you have to satisfy your investors. You have to make them believe that their investment is safe with you. Okay. So, Moody's, Standard & Poor's, I'm sure you've heard of these names sa news, no? Especially if it's regarding the investment environment in the country, no? We have Moody's, Standard & Poor's, we have Fitch, Kroll, and others that aren't really that famous, but these are the 4 famous credit rating agencies in the US. So, when there is a AAA credit rating, it means it's the best quality. There is no chance that this investment will default. Okay, mamaya pag-uusapan natin yung default risk, but it simply means when you are default, when you default in your debt, it means hindi ka na makakabayad. So, meaning, if you have a AAA investment rating or credit rating, there is no chance or there is no probability Or if there is, very slight lang yung probability that you cannot pay. Okay? So, the best kind of bond investment is kapag nakita mo AAA. You go for bond investment with AAA credit ratings. Okay? But if it's a AA, so kung makikita nyo, iba-iba lang yung itsura per credit rating company, but they mean the same. So, sa Moody's AA1, sa Standard & Poor's AA+, so ganun din sa Fitch and sa Kroll. So, it means high quality. So, meron pa siyang iba-ibang itsura, no? Meron pa AA3, AA-, okay? And then we have upper medium grade, and that's A+, or A1, A2, A3. So, A+, A-, they are still considered as upper medium grade. Okay. At ito naman, back in 2016, I don't know if you're well aware of it, the Philippines was actually called as the rising tiger of Asia because previously we were called as the sleeping tiger of Asia. But it was during the term of President Aquino when finally we redeemed the country as the rising tiger of Asia because finally, no, a Standard & Poor was able to give us a BBB in credit rating. Ibig sabihin, nandito tayo sa investment grade. Meron tayong potential, no? Wala pa tayo dun sa upper medium grade, but the mere fact that Standard & Poor was able to give us or score us a credit rating, ibig sabihin, they were already, kumbaga para na tayong ina-advertise na, hey, if you're looking for countries to invest in, I think Philippines is one of those ideal countries that you would want to invest in right now. Because they were able to give us a BBB. So, hindi pa ganun kataas, but it's a good start for the Philippines. Ibig sabihin, okay, may kakayahan, may potential. Diba? So, right now, I think we're back to BB. And it means it's speculative, no? So, bumagsak tayo ng isang level. Okay? And D, if you get a score of D, it means default. Talagang, no, red flag na yan. Don't even think about investing in that firm or investing in that country because it's notorious for not being able to pay its debt. Diba? Ang laking ang laking impression nun. So, the next time you see this A, AAA, AA, BBB, you know what that means. No, we're talking of credit rating. So again, a good bond, no, the value of a bond depends on the credit quality. So if you want to be assured that your investment will not default in the next few years, you have to really look at the credit quality of the firm. Okay. Yeah, I think I've inserted here, no. The official rating agency, nag-iisa lang po dito sa Pilipinas is the Phil Ratings or the Philippine Rating Services Corporation. So it's a subsidiary of Fitch Ratings, Standard & Poor's, and Moody's. So it's working under this international credit rating. So, nag-iisa lang po yan dito sa Pilipinas. So, it's accredited both by the Bangko Sentral ng Pilipinas and the Securities and Exchange Commission. So, the rating agency is also an affiliate. Now, sorry, I said subsidiary, no? That's a different thing pala. So, it's affiliated with Standard & Poor's, Fitch, and Moody's. Right? Okay, ito, as of 2019, akala ko na degrade tayo. BBB pa rin pala tayo. Under pa rin tayo sa investment grade. Ito yata yung nakita ko last time, So, we are in that moderate risk. Dito lang yan sa Southeast Asia, So, we haven't really moved up. Kasi, 2016, BBB na tayo. So, hindi pa tayo, walang my gosh, walang character development kung nasa istorya man tayo. Hindi siya nag-improve since 2016 because 2016 was the first time we were accredited with a BBB rating. So, hindi nag-improve. So, as you can see, Singapore is a triple A country, while Malaysia is A minus. So, we still have a lot to go. No, there is still a lot of improvement that needs to be done in our capital market situation in the Philippines. Okay, so this is just for your information. Yes, and we're looking forward na mag-upgrade po ang ating credit rating so that investors would be confident to invest in the Philippines in the coming future if we really want sustainable development for our country. So, balik tayo dito. The next is interest rate. I think ito ang pinaka-importante sa interest rates. Again, this affects the value of a bond. So, if it's a fixed interest rate or fixed coupon rate, you know that hanggang sa mag-mature yung bond, it's gonna remain the same. So, if it's 4%, hanggang 5 years, maturity period, or 10 years, it's going to remain as 4%. And then we have floating. So when we say floating, we're going to rely on the prevailing interest rates as mandated by the Bangko Sentral. Because under the monetary policy of the Bangko Sentral, that's how they decide on what would be the prevailing interest rates. So there is a good and bad side of a floating interest rate. So, syempre, pag ikaw yung bond investor, kung ikaw yung nagpautang, syempre, pag ikaw nagpautang, gusto mo mas mataas na interest. Okay? So, mas madaling salita, let's just make it easy. Kung ikaw ang nagpapautang, you always desire to have a higher interest payment. Why? Because kapag tumaas yung interest rates, tataas din yung interest income mo. And on the other hand, kapag bumaba yung prevailing interest rates, bababa din naman yung interest na makukuha mo every year. Okay? So, it's really a gamble. Sugal siya. It's either you lose big or you win big. Ganun lang yun eh. So, it's up to you if you want the fixed or the floating. Nasa sayo na yun, ano? Kung confident ka, in the next 5 years, gaganda ang ekonomiya. Especially right now, down na down ang ekonomiya. Sabi nila, there's no other way but to go up. So, if you purchase a bond at this moment, you know in the next few years, tataas talaga yung interest rates. Because the banks would go to its normal flow, no? Yung consuming behavior ng tao, babalik sa dati. We would be spending more, people will start to save more or probably invest more. So, yun na yun, ano? And then we have payable at maturity. Ibig sabihin, ma'am, paano yun? Di ba nga, pag bonds, annual ang payment ng interest. So, not all, kasi meron tayong tinatawag na zero coupon bonds. So, with zero coupon bonds, you don't earn interest income every year. You will get the entire interest payment plus your principal or the face value of your investment at the end of the maturity period. So, again, there is a risk with payable at maturity because you'll never know if the interest payment would be favorable to you. So, masasabi, ay, sayang pala, sana. Mas okay sana kung fixed na lang pala, no? Kasi sayang, dapat mas malaki yung interest na na-receive ko kung ganito yung interest rate. But because I chose the payable at maturity, kung ano yung prevailing interest rate at the end of 5 years, that would be the interest payment that you would be receiving. So, same with the floating, ano? Yung floating kasi depende sa prevailing interest rates. But yung payable at maturity, kung ano yung prevailing interest rate at the year that it matured, yun yung ibabayad sa'yo. So, again, that would really affect the value of your bond investment. How about price? Sa price naman kasi, it also is connected with interest, no? But anyway, when you say kasi price, it also means face value. Kasi when you say 1,000, yung face value niya, you would buy the bond closely or more than the face value. Okay? So, newly issued bonds will pay close to their face value. When we say newly issued, ibig sabihin, hindi pa po yan tinitrade. Parang primary market lang yan. Binili mo siya mismo sa may-ari. But, ito yung sinasabi natin, pag nakipag-trade ka na sa secondary market, pwedeng mag-fluctuate yung presyo ng bond depende sa interest rates. Okay? So, if it's a floating interest rate bond, you can either sell it at a premium or sell it at a discount. So, syempre, kung ikaw yung may-ari ng bond, gusto mo kumita ka. You would be selling it at a higher price. Diba? So, kunwari, binili mo siya ng 900, pero naibenta mo siya ng 1,100. O, diba? Kumita ka. Right? But, if you trade that at a discount, you bought it at 950 and you were able to sell that at 900, it's a discount. So, depende kung kaninong side mo titignan, kung sa buyer side or sa seller side. It depends kung paano masasabihin yung premium. But anyway, kapag binili mo siya ng mas mura, discount. Pagka binili mo siya ng mas mahal, it's a premium. Okay? Or sorry, kapag nabenta mo siya ng mas mahal, it's a premium. Pag nabili mo siya ng mas mura, it's a discount. Okay? So, just look at the figure so that you could actually understand. If the price is greater than 1,000, it's a premium. If the price is less than 1,000, it's a discount. So, kung ang face value kasi is 1,000, but sometimes, hindi pala sometimes, most of the time, hindi mo naman siya bibili at 1,000. Okay? Excuse me. The good thing in the secondary market is, the good thing with trading is that you benefit with the fluctuations of the price. So that's how traders actually gain money. It's about timing the market when you can perfectly sell an instrument for you to get a gain. Okay? Again, if the price is more than 1,000, it's premium. If you bought it in less than 1,000, that's a discount. Depends kung kaninong side, sabi ko nga kanina. So again, if we're talking of price, you know that the value of your bond investment is good. Once na-trade mo siya, ibang meaning ng trade ha, once na-trade mo siya at your ideal price, wherein you would get a gain from your investment. Okay? Siyempre, kung nabili mo siya ng 900, nabenta mo siya ng 1,100 kasi nagkaroon ng changes sa interest rates, baka kagatin talaga yan ng seller kapag favorable. Favorable sa seller, favorable din sa buyer. So definitely when we say price, it's the face value. Okay? How about yield? Okay. Ito, magkaibang interest rate sa yield ha. Explain lang natin yung yield. So, basically, yield is the total return that you get out of investing in a bond. Kasi, kapag ito total mo pa lahat ng interest payments mo at the end of the maturity period, that would be the yield to maturity. But current yield is only the yield that you receive every year from the interest payments that you receive. Okay, so we have a current yield, the yield corresponding to your interest payments for the current year, and the yield to maturity, which is the total return that you get if you hold the bond until it matures. Okay? Again, yield has something to do with your interest rates. Kasi ang nagiging unpredictable factor sa isang bond is yung fluctuating interest rates. Okay? So, if interest rates are fluctuating, merong malaking effect yun sa mga bonds natin. That's why it is the job of the Bangko Sentral to make sure that interest rates are steady, inflation rates are steady, or else matuturn off po yung ating mga investors because investors do not like changes that can affect their investments. So kung titingnan nyo tong ating presentation, graphical presentation right here, no? If the prevailing or the stated coupon rate is 4.44, okay, the price would be 90. Okay, ito yon. Kunwari, ito, binili mo siya rito. Okay. And if the yield, sorry, this is not interest pala, no? This is yield. I'm sorry. So, interest rate is different from yield. Yield is the total return you get. So, if the yield increases, right? If the yield increases, tama, interest nga eh. Pag tumaas yung interest, tama. Pag tumaas yung interest rate, ang epekto niyan sa bond investment, bumababa yung price. On the other hand, if the yield goes down, all right, the price goes up. We're not talking of we're not talking of the interest income. We're talking of the price of the bond. If you bought it at 90 and then bumaba yung interest rate, no? Magiging 100 yung price. If maging 5% yung yield, okay, the price of the bond will go down. Because there is an inverse relationship when it comes to interest rate and bond price. I'm sure hindi nyo pa masyadong magigets right now, but once we go to our bond valuation discussion, you would further understand this graphical presentation that I'm trying to show you. But anyway, the bottom line is there is an inverse relationship between interest rates and the price of the bonds. When interest rates goes lower, no, that's gonna be unfavorable. That's gonna be unfavorable to the bond investors. But when interest rates go high, that's gonna be a favorable scenario for investors. Okay, now the last is the tax status. Here in the Philippines, according to the BIR ruling number 05299, for residents, for Filipinos, bond investments are taxable 20%, no, ang ating tax rate for bond investments. For aliens or non-residents, 25%. 25%. For corporations, it's fixed at 30%. Okay? So, ibig sabihin, these are retail investors, which are Filipinos. And these are foreigners, and these are for institutional investors or corporation. This is on the interest income pa lang ha. Yes, it's taxable po. Baka isipin nyo masyadong happy kayo dun sa it's still subject to tax. And if it's being traded, trading gains is 0 to 35%. That depends on the value of your trade. Ganun din sa aliens and non-residents or foreigners. And still, 30% for corporations. So, this is according, as amended by the train law, which is RA 10963. So, that's the source where I got this taxable basis for taxation, I should say. Okay. Now, before we proceed to the types of bonds that are traded in the bond market, I know this is not part of the flow of our discussion, but I have decided to insert, the Philippine market regulatory structure so that in case you would be working in the investment banks, you would be working in insurance companies, you would know anong government regulatory office ba kayo dapat mag-report if in case you would be dealing with the bond market. So specifically, we have, of course, the government regulators. Andiyan na yung BSP, SEC, you know that by now. And then you have Bureau of Treasury, which is a department under Department of Finance. And for the bond market specifically, we have the PDS. This one is new to you guys. The Philippine Dealing System or the PDS group of companies. And so, sa PDS, meron tayong tatlong offices or tatlong related offices under PDS that is meant for the supervision of bond transactions in the Philippines. So, we call that the PDEX or the Philippine Dealing and Exchange Commission. We have the Philippine Depository and Trust Corporation. Even kahit yung under din dito yung mga equity securities natin. Ito yung PDTC na pinag-usapan din natin sa equities and equities securities market, no? And even yung clearing and settlement house natin, it's under the same umbrella, no? The PDS. But itong Philippine Dealing and Exchange Commission is really for the bond market. Itong dalawa, it's a common denominator of equity securities and bond securities in the Philippines. Okay? So whenever you look or whenever you would bump into this logo, you would know by now that that is the PDS group of companies logo. Okay? So malay nyo kasama sa quiz or sa exam natin yung mga logos. So you should actually be familiar with them. Okay? Now, we go to the types of bonds in the bond market. We have major. Ito mga major bond types po to, no? By now, you would actually, you're already familiar with them. So, in the US, aside from corporate bonds, we have government and agency bonds. And then, they also have municipal bonds, and they have MBSS and ABSS. Okay, these are more complex types of bonds. Okay. Siguro in corporate bonds, di ko na kailangan pang i-discuss yan further because you're very much familiar with that. Government and agency bonds are actually, ano rin sila eh. Kumbaga, they are channeled by the government as a form of a government bond, but merong mga private firms. But in the Philippines kasi meron tayong tinatawag na GOCCs or government-owned and controlled corporations na kung saan they also use bonds to raise capital. So parang ganun siya, no? Yes, it's a private firm or it's a firm, but it is actually owned by the government. That's why hindi sila form of government, pero owned and controlled sila ng government. Kaya siya tinawag na government and agency bond. So, ang nag-i-issue, firms pa rin, pero it is owned and controlled by the government. So, I did not include any more, hindi ko na sinama dito yung list of GOCCs, but just to give you an idea, the GOCC's example in the Philippines are the Philippine Deposit Insurance. We have the Civil Aviation Authority of the Philippines or CAAP. We have the Bangko Sentral ng Pilipinas. Yes, you've heard it right. BSP is a government-owned and controlled corporation. And you could actually buy government bonds from these institutions. We also have Philippine Sports Authority or the PSA, Philippine Amusement and Gaming Corporation or the PAGCOR, Philippine Charity Sweepstakes Office or the PCSO, Manila International Airport Authority or MIA, and the National Power Corporation or the NAPOCOR. Actually, kasama din dyan yung GSIS, no? Yung SSS, they are also considered as GOCC. So, para lang madagdagan yung information nyo about it. Yeah, so those are government and agency bonds. Next is municipal bonds. Dito sa atin sa Pilipinas, we don't use municipal bonds because in the states, they have different states that issue municipal bonds. So, kung meron government bonds na treasury bonds, meron din namang municipal bonds. But here in the Philippines, we don't practice the use of municipal bonds. And then, the fourth one, we call it the mortgage-backed securities and asset-backed securities. So, by now, I don't know if you're well aware of what mortgage is all about. So, mortgage is a term which is used if you're using financing for your house. Ibig sabihin, pag bumili ka ng bahay or real estate, and you're using the bank to finance that house, we call that mortgage. Okay? Yung asset naman, so any asset classification that is securitized. So that's the term, no? Sinecuritized siya ng banks to make it as a form of security or as a form of investment. Now that's gonna be kumbaga, it's another form of investment through the form of utang. Kasi you know that mortgage is a form of utang. Ang gagawin ng bank is i-securitize na yon so that ibebenta niya yon as a form of investment. I know it's a very hard concept to grasp, but to give you an idea what mortgage-backed securities look like, this is inutang na bahay. Kaya nga sabi niya, bank lends John $150,000 for John to buy the house. Okay? So what happens now is magkakaroon ng other people like John who acquired loan from the bank through mortgage. Kasi we know pag mortgage bahay, talagang babayaran yan. Long term. It's a long-term utang. So, ang gagawin ng bangko, para kumikita pa rin siya dun sa utang niya, ipupool niya. So, parang when you say pool, it's gonna gather all of the clients just like John. And then, kaya makikita niyo dito, John's mortgage, other mortgage, other mortgage. So, yung utang, isi-securitize. And then, ang bibili ng utang ay si large banks. So when we say large banks, we're talking of investment banks. Okay? And then si investment bank, ibebenta niya sa mga investors through the form of mortgage-backed security. But it's a form of a bond, but ang tawag sa kanya, since it's very specific, galing po siya sa utang sa bahay, it's now called mortgage-backed security. Ibig sabihin, yung value ng investment ay nanggagaling sa utang. I don't know if you can get that right, no? Again, yung value ng investment ay nanggagaling sa mortgage. That's why it's called mortgage-backed security. And it also applies for other securitized assets. Ano? Ulitin natin yung ating circulation. Si John right here would would ask for money from a bank to finance his house. So, binili na ngayon ni John yung bahay. So, para ma-lessen yung risk ng bank, ang gagawin niya, isi-securitize niya yung utang sa pabahay. Because when we say utang sa pabahay, it's gonna cost you millions. Hindi siya biro-birong pera. So, para ma-leverage yung risk ng bank, gagawin niya ulit product. So you know that this is already a product. Kasi nagpautang ka eh. Housing loan ang tawag doon. Produkto na yun ng bangko. Para ma-leverage or mabawasan yung risk ng bangko, kailangan niyang pagkakitaan yung utang na yun. So they call that the pool of mortgages. And then the large bank, ibebenta yan ng bangko, commercial banks, no? Ibebenta niya sa mas malalaking bangko to attract and then the large bank will then convert that to what? Mortgage-backed security. So it's only the bigger banks who can afford to sell MBSs or ABSs. Okay? So in return, investors, ang tawag natin sa kanila, mga high-risk investors, sila lang ang may kayang sumikmura ng ganito ka risky na investment. But of course, high-risk investments give higher return in return of the risk that is attached to that investment. Okay? You will learn more of that on your next activity, itong MBS and ABS. Okay. I know this is another terminology that baka overwhelmed na nga kayo with the terminologies, but we don't have a choice because ako naman, I'm not forcing you to memorize everything. What I want is I want you to be familiar with the terms, okay? So, what are credit default swaps? Speaking of mortgage-backed securities kasi, there is a form of insurance that targets mortgage-backed securities. So, ang tawag sa kanila ay credit default swap. So, in case, balik tayo dito, no? In case, etong si large bank, no, nag-default yung mga mortgage coming from this bank to the smaller bank, merong protection yung mga large banks. And we have third-party insurance corporations. Okay? So, merong mga insurance corporations that sell credit default swaps to large banks. So, in case mag-default itong mga to, merong mag-i-insure sa kanila. Okay? So, that's the role of credit default swaps. They are used as a form of insurance, or they are sold as an insurance against potential default. So, the seller receives monthly payments from the buyer in exchange for taking on the risk. So, for example, meron akong sasakyan. Bibili ako ng comprehensive insurance. I usually pay at least 12,000 for my car insurance. That's for a year already. But in the case of investment banks, they pay monthly insurance for credit default swaps to third-party insurance providers, just for the sake of keeping this mortgage-backed security. So, hindi lang sa mortgage-backed securities applicable ang credit default swaps. They're also applicable for emerging market bonds, local government bonds, and corporate bonds. So, in short, dinagdag ko lang itong credit default swaps because pinag-usapan natin yung mortgage-backed securities. So, again, when we say credit default swaps, these are insurance for asset-backed securities, mortgage-backed securities, for corporate bonds, for emerging market bonds. Okay, so it's a form of insurance. Now, let's move on to the other types of bonds. So, hindi siya pasok dun sa major, but these are also considered as types of bonds. So, we have treasury bonds, of course, you know that already. These are short-term, So, treasury bonds are long-term pala, no? Notes pala yung sinasabi ko. So, treasury bonds are government-issued bonds. Callable bonds, ito yung in-explain ko kanina, yung may call tsaka put options. So, when a bond has a call and put option, you know that it's a higher risk form of bond. Ibig sabihin, mas mataas yung rate of return. And then junk bonds, the reason why they are called junk bonds, because they are considered as a high risk form of bond. So therefore, they pay much higher interest. So for such bonds, there is a higher risk that the investor will lose the entire investment, hence the name junk bonds. Because we know when we resort to bonds, they are a safer form of investment. But in the case of junk bonds, they are considered as high-risk bonds. And then zero coupon bonds, I've mentioned this a while ago. They do not pay annual interest, but they pay the entire interest at the end of the maturity period alongside the face value of the bond. And then coupon-bearing bonds, or the usual corporate bonds, they make coupon payments during the life of a bond. So, annual interest payments. And lastly, there's what we call convertible bonds. So, these are bonds that can be converted into common stock. So, let's be more specific. These are bonds that are convertible not in preferred, but in common stock. Siyempre, kung ikaw yung beginner na investor, at first you would just want to grow your money, no? Kuha ka ng zero coupon bonds na convertible. At the end of 5 years, pag lumaki na yung value ng bond investment mo, and you could say that you are a more experienced investor, you would now want to choose to convert that investment into shares. So, mas mabilis na. Okay? Automatic na siya. At the end of the maturity period, you would now invest that money to shares. For our next slide, I just want to be more realistic this time. I'm showing you guys the type of bonds that are traded in the Philippines as of this moment that I've recorded this lecture. Now it's 2021. So these are the list of the bonds that are available in our country that can be bought by individuals like you. So we have treasury bills, we have retail treasury bonds, we have fixed rate treasury notes, we have dollar sovereign bonds. Kasi when we say dollar sovereign bonds, we're talking of government bonds. So dollar government bonds. And then we have dollar corporate bonds. And we have long-term negotiable certificate of deposit or LTNCD. So, actually, itong long-term negotiable certificate of deposit, sa madaling salita, it's actually a time deposit. But what banks do is they securitize these time deposits and make it as a form of a bond. Okay? Kasi pag sinabi mong time deposit, hindi mo pwedeng i-deposit yung pera mo unless na pumatong tuloy. At least, hindi mo siya pwedeng i-withdraw unless tumungtong, not pumatong, tumungtong na siya dun sa kanyang maturity period. So, let's just say, you have a 5-year time deposit. Okay? You cannot use that money in a span of 5 years. Okay? So, para siyang pera mo sa bangko, but hindi mo siya pwedeng galawin. Kasi merong penalty kapag ka withdraw mo yung pera mo na not within the time frame. Okay, to give you a more, to give you an idea how long-term negotiable certificate of deposit is, let me share with you yung website ng Security Bank. So, ayan, nandito na tayo sa website ng Security Bank kasi baka sabihin nyo palaging Metro Bank ang ini-endorse ko. I've just seen it dito sa kanilang website, which is securitybank.com. So, LTNCD or Long-Term Negotiable Certificate of Deposit is a long-term instrument sold by Security Bank. But I think some banks also have this product, for those looking for a safe investment with high returns and want the flexibility of a negotiable instrument. So as you can see, nandito yung kanyang description. It's in peso. It can have at least the time frame is 5 years and 6 months. So hindi mo pwedeng galawin yung investment mo sa loob ng period na yan. So, it's unsecured, meaning there's no need for a collateral. So, the rate is 4% per annum. So, as compared to 0.75 or 1.25%, no, mas okay na yung 4%. Mas malaki na yan. At kung wala ka naman talagang paggagalawan for 5 years, willing ka na yung liquidity mo is ma-hold for 5 years and 6 months, then go for it. The issue price is 100% of the face value. Minimum investment is 50,000. Increments of 10,000 thereafter. So the interest period is quarterly. And it's covered by the PDIC up to 500,000. And it is actually traded sa Philippine Dealing and Exchange Corporation or PDEX. Okay, so if you're interested to know more about LTNCD, you can visit the website of Security Bank. Pero wala po akong bayad dito. I'm just showing this as an example. So this is considered as a fixed income investment. Hindi siya outright sinabi as a bond, but it acts as a fixed income investment because you receive interest in a regular basis. And it's long-term. Okay. So going back to our slides. Okay. Now we move to, I think this is the third discussion point natin, risk in bond investments. Actually, the major classification of investment risk are two. Okay, systematic and unsystematic risk. I also discussed this in the investment portfolio management class, but I would also include this here in our capital market discussion, just to give you an idea of what systematic and unsystematic risk is all about. The reason why I discuss this in my investment management class is because we are actually computing for this, itong standard deviation, tsaka we're computing for the total risk. Okay, so kasama po yan sa kinu-compute. But as you can see here, no, systematic plus unsystematic risk is equal to your total risk. But anyway, so since we are explaining everything in this subject, wala po tayong computation right now, I just want you to understand that when we say, as a future financial analyst or as a future financial manager, a financial planner, or whatever, if you're planning to be a broker, you should be well aware of these two major risk categories. Okay, so systematic risk means it's unavoidable. It's part of the system. It's built in the system, and this risk cannot be avoided. No, according to our financial management principle, there are risks that can be avoided, and there are risks that cannot be totally be avoided. Hindi talaga siya pwedeng tanggalin. And so we call that systematic risk. And unsystematic risk means it's avoidable. Okay? Systematic risk means it's non-reducible through diversification. But unsystematic risk is reducible through diversification. So example, ng hindi kayang i-control ng mga companies, no, we have inflation. We have recession. Ngayon, meron ng bago, pandemic. Now, this cannot be simply controlled. It cannot be controlled by, by companies, by managers. Di kayang kontrolin yan, no? Interest rates also, di pwede. Unemployment, di kaya. Climate change, di rin kaya. It's all systematic. But when we say unsystematic risk, it's, say for example, labor strike, managerial change. What else? Yung pagiging innovative ng isang company, that's all avoidable. Yung pagiging pasay, ibig sabihin hindi nag-innovate yung isang firm kaya nawawalan ng sales. Those are avoidable. Okay. Now, the reason kung bakit ko to isinama dito, yung major classification of investment risk, is because we have a list of risk here. Okay? It's up to you. How are you going to understand whether it is unsystematic or systematic? Mamaya pagka dinefine na natin, I'm sure you would know, you would classify all of this risk, whether it's systematic or unsystematic. So first, let's go to, basahin ko muna pala isa-isa before tayo mag-proceed dun sa per risk, So we have the default risk, interest rate risk, reinvestment rate risk, price risk, inflation rate risk, risk of call, liquidity risk, political and regulatory risk, business risk, market risk, and exchange rate risk. So I think these are 10 if I'm not mistaken. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 11 pala. I thought it was just 10. There's a lot. Actually, marami pa yan. Kasi per risk category, marami pa siyang sub-category. So these are just a bird's eye view of this, all of the risks that are present in the investment world, no? So let's start with the default risk. So default risk is from the definition of default, the inability to pay the investor the face value of the issued bond. Okay? So the failure of the borrower, kasi yung borrower is the issuer. The failure of a borrower to repay its lender. Okay? So here is the principal coupon bond. So meaning default, hindi ka na makakabayad. Okay? Right. Alright, next is the interest rate risk. Okay, for the next 3 following risk, which is the reinvestment risk and the price risk. They are actually connected with each other in a sense that all of these are brought about by the changes in interest rates. Okay. Sa price risk, may connection siya sa interest rates because in general, when interest rates go up, the bond prices go down. So the bottom line there is really changes in interest rates both have gains and losses depending on which investor are we talking about. Kasi kapag ikaw yung nagpautang ng 5%, tapos bigla 6% na yung sumunod na prevailing rate, lugi ka. Kasi you would always look for a higher rate kung ikaw yung nagpapautang. Diba? So, bababa yung value ng investment mo kung ikaw yung nauna na nagpautang dun sa mas mababa. Diba? Siyempre, kung pwede ka naman magpautang ng mas mataas, why not dun sa mas mataas? So, what happens to the old bond price? Bumababa yung value. Bumababa yung value niya kasi yung return, hindi siya ideal. Kasi you would want a value which is greater palagi. The prevailing interest rate right now, if it increases from the older ones, lugi yung mga naunang nag-invest. So you would want a lower rather than higher interest prices kung ikaw yung nagpautang. That's why yung reinvestment rate risk, kung babasahin natin siya, it's actually the effect of the effect of changes in interest. So sabi niya, reinvestment risk is the risk that the proceeds from the payment of principal and interest na po yan, which have to be reinvested at a lower rate than the original investment. Okay, to make it short, you would want to reinvest at a higher risk, at a higher price sana. Yun ang palaging mantra ng mga investors. Kung saan ba ako mas mag-gain yung investment. You don't want your investment to lose value, but rather you would want an investment that earns value in the long term. So when we say reinvestment risk, instead of reinvesting it at a good rate, you are losing the price of your investment if ayun. So ito naman yung vice versa, Ito yung vice versa nung sinasabi ko kanina. So this time, if you are going to reinvest it at a lower rate, lugi ka if 5% yung naunang rate. Okay? And anyway, the general equation right here is that if the interest rates rise, the prices of the bonds fall. If the interest rates fall, the prices of bonds increases. So there's a difference between the prevailing price right now and the yield of the bond. Okay? Kasi the yield is actually the total income that you derive from the investment. Ulitin natin. If the interest rate price, the value goes down. Okay? If the interest rates fall, the prices rise. Kasi pwede mo na siyang ibenta ng mas mataas dun sa presyo na nabili mo siya. Right? Kasi nga, magi-increase dahil bumaba yung interest. But here's the thing, the yield will rise, yes, but if the interest rates fall, the yield will fall. That's why dito sa reinvestment risk, the yield actually went down. Sabihin sana goes down. So the yield went down. So from 5% sana, i-reinvest mo siya, kaso yung prevailing rate niya went down. So, lugi ka pa. Sana naghahanap ka dun sa mas mataas na yield. But because bumaba, yung reinvestment risk, Yun nga lang, ano, that's the other side of investing in floating or unstable interest rates. That's why, again, it's the job of the Bangko Sentral to keep a stable interest rate in the economy. Okay? So, like I said, ulitin ko lang, market interest rates and prices of fixed rate bonds move in opposite directions. So, market interest rates are floating, prevailing interest rates. And then we have fixed rate bonds. So, when we say fixed rate bonds, you're acquiring the bond for a certain period of time at wala kang balak i-trade before mag-expire yung bond. So, if you are a fixed rate bond holder, nalulugi ka kapag ka tumataas yung interest rates because the bond prices goes down or the value of the bond goes down if interest rates goes up. I know it's very complicated, but always remember that they have an inverse relationship. Para na lang hindi kayo malito. Pagka tumataas yung interest rates, bumababa yung bond price because kung ikaw yung nagpapautang, no, ayaw mo na ayaw mo na tumaas yung interest rate kasi hindi yun favorable sa'yo. You would want a higher interest rate kung ikaw yung nagpapautang. Okay? Next is the inflation rate risk. From the picture, as you can see, no, kaya ko siya pinili. Literal na nasusunog yung pera kasi pag tumataas yung inflation rate. It's because when we compute for the real interest rate, we deduct the rate of inflation para makuha mo yung totoong value ng investment mo in a particular year. So habang tumataas yung inflation rate natin, bumababa yung real interest rate ng ating investment. So we don't want a stable inflation rate, no? If ang ideal inflation rate sa isang bansa is actually 2.5 to 3%. So more than that, it's a dangerous level na kailangan ma-address kaagad ng central bank so that all the consumer goods will go back to its normal prices. Because when the inflation rate is high, people spend less, okay? And then investment value is lesser as well. So, maraming factors na ang naaapektuhan because of high inflation rates. Next is the risk of call. Ito yung kanina na nabanggit ko na dun sa redemption features, ano? When interest rates are favorable on the side of the issuer or the company, no, pwedeng i-purchase, no? It's either i-repurchase ng company or bayaran in advance yung bond without even letting it mature. Okay? So, syempre, if that's the case, sabi niya, if the bond will be redeemed by the issuer before its maturity date, the rising risk for the investor because he would have to reinvest the redeemed amount at a much more lower rate or in an unfavorable investment or investing market scenario. So, yun din yung kanina, no? Yung sa reinvestment rate risk. Yun ang sinasabi niya, if you originally bought it at 5% and it's gonna be reinvested at 4%, lugi ka doon. Diba? You don't want to reinvest your money na kung saan the value will be less than the original. I think mas malinaw na tayo doon, ano, doon sa investment rate risk and the risk of call. I think they mean the same. And then of course liquidity risk. This is in terms of the issuer, ano. When the firm is experiencing liquidity risk, ito hindi to pwedeng mangyari sa gobyerno kasi hindi naman nababankrupt ang gobyerno, ano, palaging may pera yan. Ito sa mga ano lang to, sa mga private firms or corporate bonds. So, liquidity means wala kang available na cash in the next short-term period. And when we say short-term period, that's still counted as 1 year. So, kung hindi ka liquid within a year, wala kang pambayad ng interest sa mga bondholders mo. So, that's what we mean about liquidity risk. Kapag ka hindi enough yung profit-making strategy, magkukulangan talaga. Magkukulangan ng enough sufficient funds to cover your bond liabilities. Okay? And then of course, we have political and regulatory risk. Kung sino man yung nakaupo na politician or leader, no, nag-iiba-iba kasi yung regulations natin in terms of yung sa Department of Finance, sa Treasury, sa SEC. So, pwedeng may mga changes na ayaw masyado ng mga investors, specifically if they are foreign investors. So, we would want sana, no, yung unstable na political and government regulations. So, I've inserted pictures of very controversial, hindi naman controversial. They are considered as very famous government leaders. No? We have Carrie Lam of Hong Kong. We know she is in the front line of the mess in Hong Kong in 2020. Nung nag-start yung kanilang rally for 4 months, and then the coronavirus happened. May mga conspiracy theories na kumalat na ang China talagang sinadya nilang gawin yung virus para mapatigil yung mga nagrarally sa Hong Kong. No? But these are just conspiracy theories. Hindi mo naman masabi at hindi mo rin ma-verify kung totoo or hindi. And then, kumalat lang siya kasi hindi nila alam na ganun pala kagrabe yung virus na na-create nila. No? Grabe yung mga conspiracy theories na yan. But anyway, so si Carrie Lam of Hong Kong, si Jair Bolsonaro ng Brazil, no, they're saying he's the Adolf Hitler version of 2020, parang ganyan. Because he's known to be a authoritarian, medyo dictatorship yung kanyang pamumuno, no? And then we have Donald Trump of USA who was recently called to be impeached again for the second time, no? Second ba? Third. No, very controversial leader. And because USA is a powerhouse, economic powerhouse, lahat ng desisyon ng USA apektado yung buong mundo. Okay? Yung galaw ng stock market apektado pagka may mga malalaking changes sa kanilang stock market. Vladimir Putin, which is also very controversial kasi sabi niya sila daw yung nakikialam sa affairs ng USA. And then we have Aung San Suu Kyi of Myanmar na at the moment she's being held hostage dahil nag-kudeta ang militar ng Myanmar. They're saying ayaw nila yung leadership ni Suu Kyi. Ano? And then this one, I inserted this, si Jacinda Ardern ng New Zealand because they are constantly being called as the number one in terms of COVID response in the entire world. Kasi since August and up to December, no, actually January 2021, sila lang yung hindi na kailangang mag-mask kapag lumalabas because they were able to control the spread of the virus in New Zealand. So they're like living a normal life because of that. Ano? So very prosperous ang New Zealand because of the leadership of Jacinda Ardern. Okay. So, ang laking factor sa investment environment, yung presence of a very stable political environment in a particular country. So, before kayo mag-invest, you have to make sure na the leadership in a country is very reliable. Ano? Kasi dito sa Pilipinas, alam naman natin, ang buhay ay weather lang kung sino yung nakaupong presidente o kung sino yung nakaupong congressman o governor. Ang malakas ang kapit, sila yung mga nagiging prosperous na mga kumpanya. Pero merong mga companies na na-withstand yung time, na-withstand yung political chaos ng Pilipinas, hanggang ngayon nandyan pa rin naman. But the secret is, sabi ko nga, it's not who you are, it's who you know. Kaya if you would want to live long in the business, you have to make sure you have the right connections or else hindi ka talaga magsusurvive. Ano? That's the reality. And then we have business risk. Business risk is a risk that can be controlled by the firm. Okay? Ano yung mga yan? Ito yung mga future strategies. Diyan napapasok yung research and development. Diyan napapasok yung continuous innovation. Diyan na papasok yung partnerships, yung merging and acquisitions, no? Instead of creating more competition, you beat the competition by joining them. Ganun, ano? Then, of course, financial risk, nandiyan na yan. Yung, kaya nga, sa Southeast Asia, every year may ina-awardan na CFO of the Year. No? Wala naman tayong sinasabing Supervisor of the Year or Accountant of the Year. We have CFO or the Financer of the Year. It's because without the intelligence of the financial officer, you cannot grow the company to greater value. It's the job of the financial officer to leverage financial risk in the company and to grow the company in terms of value. And then we have operational risk, no? And then we have compliance risk. Napakaraming business risk. Nandyan yung success at failure actually ng isang kumpanya. The backbone of the operation starts with, you know, the day-to-day activity of the firm. So, hindi lang sapat na alam mo kung paano nag-ooperate yung firm. You have to know kung sino yung management na nag-ooperate behind the firm. Because the sustainability of the firm depends on the leadership of the business. So, you don't just invest because popular yung firm na yan yung palaging pinag-uusapan. You invest in that firm because you know that the leadership of that firm aligns with your values, your beliefs, and your principles. Okay? So, kapag ka ligwak yung pamamaraan ng pag-ooperate ng isang business, you know it's not sustainable. It's just gonna last for 5 years or in the next 10 years. But in the next 20 years, you're not sure. Diba? That's why you have to constantly monitor the performance of the management of the firm. And then we have the market risk. Ang pinagkaiba ng business risk sa market risk is that the market risk is an entirety. Mas malaki yung sinasakop niya. We're talking of stock prices, we're talking of inflation, currencies, commodities. In short, we're talking of economics. And then also, we're talking of civil unrest, hurricanes, volcanic eruptions, floods, economic sanctions, parang Pilipinas lang to last year. Na-experience natin to lahat to, volcanic eruption, hurricanes, flood. So all of these things, the performance of an industry or a sector depends on how the economy is doing. So if the economy is not well, of course, sectors would be affected. Certain markets would be affected. So you would want to also look into the risk of investing in a particular industry or in a particular market. So, anong market kaya ang affected kapag ka nagkaroon ng civil unrest? Or anong sector kaya ang magiging affected kapag ka binaha? Siyempre, nandiyan na yung agriculture, nandiyan na yung mga leisure firms, di ba? Mga casino. Siyempre, kapag ka merong civil unrest, political instability, nobody would be interested in these businesses. That's why you also have to keep in mind that there are various market risks. When the economy is not well, our people are not well, our politics is not well. Siyempre, ano yan? Domino effect. And then finally, this is the last one. Exchange rate risk. This is applicable for firms that are operating in a global scale. Because when you are operating in a global scale, you are purchasing and selling goods in foreign currencies. Okay? So when there is a difference or there is a fluctuation in currencies, syempre, yung gains mo and losses are also dependable on the exchange rate. So, currency values moves up and down all of the time. So, managing exchange rate risk is an important part of international finance. So, anything that has to do with the fluctuation of exchange rates, dyan na papasok yung tinatawag nating mga financial contracts, no? Yung mga financial contracts natin such as forward contracts, future contracts, these are used to minimize exchange rate risks. Now that we have discussed all of the risks that are associated when it comes to bond investment, siguro balikan lang natin yung kaninang major classification natin, which is systematic and unsystematic risk. So, tignan natin kung saan dito yung pwede nating i-consider as systematic and alin yung pwede i-consider as unsystematic. Again, when we say systematic, it's unavoidable, and when we say unsystematic, it's unavoidable. So default risk is, this one is unsystematic, simply because you can actually control. The firm can control default risk. Interest rate are beyond the control of a company. Same with reinvestment rate and price risk, because they are all connected with interest rates. So therefore, they are systematic. When we say inflation, again, it's beyond the control of the firm. Risk of call is unsystematic because it's totally avoidable if the firm wants, and if the investor would also want. So you would rather go for coupon rate bonds with fixed interest rather than with bond investment with redemption features such as call and put option. And then liquidity, of course, this is controllable by the firm. Political and regulatory is not. Business risk definitely it's within the control of the business. Market risk is not within the control of the business. And lastly, exchange rate risk is not within the control of the firm. So therefore, before mag-invest yung mga kakilala nyo, or before kayo mag-invest, you have to make sure all of the listed risks, as you can see on the screen, if not totally pwedeng tanggalin, can actually be minimized. The term there is maximization of return while minimizing the level of risk. So we've arrived on the last portion of our lecture for this video. Okay, it's the risk-return trade-off of investments. So as you can see, we have a triangle right here. So as the triangle ascends, the level of risks also increase, and the return or the potential return also increases. So as you can see, meron tayong tatlong category, no? We have the saving tools, investment tools, and then we have the speculative investment tools. Again, habang nagiging unpredictable ang isang investment, tumataas yung kanyang possible return. Pero yung kanyang risk, tumataas din. Okay. So, dito, nasa gitna lang yung bonds. So, after the saving tools, nandun na yung bonds because it's a form of investment, but it's the safest form of investment. So, as you can see, susunod sa kanya, mutual funds, index funds, and then we have stocks and real estate. Higher than that, we have commercial papers, options, collectibles, and then we have the futures. Actually, pwede na nga nating isama dito yung cryptocurrencies because they are highly speculative. As of this moment that we're talking, I'm recording this video, Bitcoin actually reached 50,000 per Bitcoin. Yep. Last year when I recorded my first video, it was only at 20,000. No? 20,000 ba? Right, 20,000. And then by January, it reached 30,000. And by February, grabe, 50,000. Grabe talaga. Sobrang hype talaga yung cryptocurrencies because they're saying malapit na talaga maging pase ang currencies that we know, especially dollar, malapit na daw siyang mawalan ng value. And so, for exchange rate risk to be minimized, the use of cryptocurrencies should be used because it's a form of a decentralized money. Wala siyang pinagbabasehan ng value na ibang foreign currency. It's just the value of the Bitcoin itself is the value of the coin. Ang galing, Okay. So as you can see, the trade-off right here is that as return goes up, the risk also goes up. Same with the timeline or the time duration. As your investment is exposed to a longer period of time, the value of your investment also goes up. So as you can see here, ang nasa pinakailalim is your cash and cash equivalents. And then the second one is short-term bonds, treasury bills. We have short-term bank FD. We have liquid mutual funds. And then we have corporate bonds. So pangatlo pa lang siya. No? Corporate bonds, debt funds, fixed income assets. And then we have deposits, etc., etc., followed by gold, real estate, balance funds, NPS, etc., etc. And then we have derivatives, alternative investment, we have private equity, venture capital. So if you are interested to weigh, or let's just say, how would you decide on which investment asset would you put your money in the future, might as well look at this graphical presentation, just so you can have an idea on how to balance your risk and your return. Because ideally, when we say bonds kasi, palagi lang siyang nasa gitna. It's not giving you the return of your saving tools, and it's also giving you the growth that can be described as a form of investment. Nasa gitna lang siya totally. So what I'm just trying to tell to you guys is this, the risk-return trade-off of bonds is palagi nasa gitna lang. It's a safe form of investment because it gives you growth, and at the same time, it gives you security and protection. Kaya kung akong tatanungin, the best kind of investment would always be bonds. You can't go wrong with bonds. And so that's it with our discussion, no? Ganun ka-importante po yung bond investment, yung fixed income securities and the fixed income securities market as a whole, because it keeps our economy going. It gives sustainability to our governments and to our firms. And nakita nyo naman, dun sa slide natin sa unahan, our capital market consists mostly of bond investments. So I hope marami kayong natutunan dito sa video. And for that, if you have questions and you find this video interesting, please let me know, message me, or it's up to you if you don't want to react on anything. But I hope marami po kayong natutunan. Again, thank you for finishing the video, for finishing the lecture. God bless you guys.